Thank you for starting your week with us. Hello and welcome to Business Daily. I'm Ijun in Seoul. Let's get started with a look at today's highlights. Korea's economic growth ranked second among OECD nations in the third quarter thanks to stronger exports. The government and ruling party agree to lay out housing support programs tailored to young adults, newlyweds, and senior citizens. These stories and more coming right up. Korea's economy grew at the second fastest rate among OECD nations during the third quarter of this year on the back of solid exports and government spending. Our Kim Ji-yeon starts us off.
Data by the OECD released on Monday shows Korea's third quarter growth was at 1.4%, mainly due to robust exports. The country's growth was well above the OECD average of 0.6%. Only Latvia at 1.5% growth achieved a higher growth rate. Korea's exports during Q3 increased more than 6% from the previous quarter, the fastest pace since 6.5 years. The OECD also said increased investment in the construction sector and the execution of the government's $9.8 billion supplementary budget bill on job creation were behind the strong growth rate. Despite this, a local expert says Korea still has a long way to go to maintain the recovery momentum, pointing to the country's $1.3 trillion household debt problem.
Increases in household disposable income or spending are not showing signs of picking up anytime soon due to the rapidly aging society, and this is still weighing down domestic consumption.
The last time Korea ranked second highest for quarterly growth among OECD countries was in 2010 with 2.2% growth. The International Monetary Fund adjusted its economic growth projection for Korea this year to 3.2%, up 0.2 of a percentage point from last month's forecast. Kim Ji-yeon, Business Daily.
Korea's top 10 conglomerates have seen their operating income almost double in the first 3 quarters of this year. The country's 2 leading tech titans, Samsung Electronics and SK hynix, took up more than half of the combined amount. Total profits from January to September of this year was tallied at a record-breaking $58 billion, almost doubling from a year earlier. The full-year operating profit for 2016 was $41 billion, which is expected to approach $73 billion this year. Operating profits of Samsung Electronics alone reached $22 billion, surging almost 180%. And now, moving on to our coverage of the markets, we have our markets contributor Kathleen Oh joining us on the line today. Hello, Kathleen.
Hello, Ji-yeon.
All right, so tell us how the local markets performed on the first day of the week.
Korean markets overall showed a weaker move throughout the day. On the equity side, KOSPI index traded lower on foreign investors and institutional selling. At the closing bell, the KOSPI fell 1.4% to close at 2507.81, while the tech-heavy Kosdaq rose a little by 0.06 points to finish at 792.8. Foreigners sold over $380 million and institutions over $55 million worth of net shares today. Meanwhile, individuals net bought $393 million. Samsung Electronics fell drastically by 4.65% on the back of a major research house's equal weight recommendation from overweight, and SK hynix declined 2.23% as concern on NAND flash industry slowdown rises. In the FX market, the Korean won opened at 10.85 against the US dollar, down from 10.85.4 last Friday. It lost value throughout the day, ending at 10.88.6, weakening 0.31% from last Friday. Won depreciated against the US dollar mainly on the back of foreigner stock selling, with the dollar index falling to 92.7 from the U.S. trading session last week, and the Japanese yen strengthening. The yen-won cross weakened to 9.78, down 0.52%.
All right, then. Can you give us the latest rundown on major market events to look forward to this week?
Sure. The market focus in Asia this week will be on the Bank of Korea's Monetary Policy Committee meeting on 30th November. This is the last MPC meeting of the year. We expect it to hike the policy rate to 1.5% for the first time since the last rate cut in June 2016. Current market consensus is mostly expecting a rate hike, but some concern rises with the no change decision as the strong currency and some of the weaker inflation trend continues. But we think a rate hike is highly likely before the anticipated rate hike by the Fed in December. And also, Korea's economic growth was higher than expected in Q3. CPI inflation is near the BOK's target level of 2%. And the MPC members appear worried about the potential negative effects of a prolonged low-rate environment. Market players will focus on any dissenting votes this week, and dissenter against the hike may diminish market expectation of another rate hike in the near term.
Now, shifting our focus abroad, where should we keep our eyes on the global data front?
We are watching out for a data-heavy week in the U.S. this week. U.S. data points may signal ongoing divergence in the economic condition. We expect revised Q3 GDP to show a robust growth of 3.2% quarter-on-quarter, higher than prior quarter's 3.0% on Wednesday. The ISM manufacturing data out on Friday is likely to support this positive picture. In contrast, however, Q3 core PCE data is likely to remain weak at 1.3% year-on-year. On the political side, on Tuesday, the Fed Chair nominee Jerome Powell will appear before the Senate Banking Committee for his hearing. On Wednesday, the current Fed Chair Yellen's address will be watched for any further indication that the Fed may be losing confidence in the idea that low inflation is transitory. In the euro area, the recent decline in inflation may pause, given higher energy import prices in November, but the euro area unemployment rate is likely to continue to fall, given strong demand for labor. Lastly, in the commodity space, market focus will be on the OPEC meeting on Thursday. We expect an extension of OPEC output cuts at current volumes to the end of 2018. This has been flagged by various OPEC members ahead of the meeting. Failure to reach an agreement on a production cut extension, on the other hand, has not been factored in by the market and would be a disappointing factor. That's all from me. This has been Kathleen No for Business Daily.
The Korean won has been gaining ground against the U.S. dollar to the worry of many local exporters. Adding to their concerns, many experts see the trend continuing all throughout next year. Our Eunice Kim has more.
The Korean won has been climbing steadily against the U.S. dollar. Despite the local currency closing lower on Monday, overall it remains on an uptrend. The $1 exchange rate fell below the 1,090 mark last week for the first time in over 2 years. The Korean won has been gaining on the dollar since January, when it was trading at 1,208 won to the greenback. The won has benefited from a recovery in the local economy on the back of booming exports and the easing of tensions with China. Expectations that the Bank of Korea will raise interest rates soon has also backed the currency's rise. Investors' growing risk appetites in emerging markets, including Korea's main Kospi stock exchange, is also curbing demand for safe haven assets like the dollar.
The gains are seen as being led by a continued inflow of foreign investment, together with strong exports and rising momentum for growth.
And experts predict the upward trend could continue into next year, with expectations growing that the U.S. Federal Reserve could exercise more caution in raising interest rates next year. They say another factor contributing to the won's rise would be a further recovery in the global economy.
If the global economy continues to recover next year, the Korean economy is likely to improve as well. I project the annual average for the Korean won to come out to 1,110.
While a strong won could be a sign of improvement in the economy, it is stoking worries among exporters at the same time, who fear the rising local currency could cut into Korea's export competitiveness. Eunice Kim, Business Daily.
Following a wave of new measures to cool the country's overheated real estate market, the government is now rolling up its sleeves to give more practical support for those who actually need a home. The government and the ruling party met today to fine-tune details on the new package of measures. Our Kim Min-ji reports.
The Korean government says it will provide customized policies to support people in dire need of housing. During a policy coordination meeting between the government and the ruling Democratic Party of Korea on Monday, the two sides discussed the direction of a roadmap for housing welfare for young people, newlyweds, and the elderly.
We seek a paradigm shift in housing welfare from a provider-oriented program to one that focuses on the needs of home buyers. The package will consist of different support for people in different stages of life.
For starters, the government plans to expand the number of rental homes. Some 300,000 rental homes will be set aside for those under the age of 39 who are not homeowners, as well as increased loan programs for them. For newlyweds, the government will ease the criteria to expand the number of people eligible for housing support. Currently, they need to be married for less than 5 years, but it will be extended to 7 years for couples without children and also include soon-to-be-married couples. The government plans to offer some 70,000 homes for people in this category at about 80% of market prices. For old people who own homes but don't have a stable income, a new program will be launched that allows them to sell their homes and receive the money in the form of a pension while living in public rental houses. The government will also provide 1 million rental properties for ordinary citizens that do not own homes. The government and the ruling party hope that the new roadmap will reduce the burden on people that have put off marriage or having children, as well as act as a bridge for those in the low-income bracket to break into the middle class. The ruling bloc said housing support is the basic of achieving the government's people-centric policy goals.
Solving the housing problem is the best measure for people's livelihoods, and this will determine the success of the Moon Jae-in administration as well as the fate of the ruling party. We will continue to manage the housing market and persuade the opposition parties to revise any relevant laws.
The latest measures are focused on giving practical support to those in need of housing, following previous policies put forward to cool down the real estate market, including stepping up regulations and curbing speculation. The government will fine-tune the details before unveiling the full package on Wednesday. Kim Min-ji, Business Daily.
The government is mulling over a revision to the country's anti-graft law, commonly known as the Kimmelman Act. The move comes as an analysis by the Korea Institute of Public Administration concluded a change was needed to ease the financial impact on Korea's farmers and fishermen. In a closed-door meeting at the Sejong government complex this afternoon, officials from the Anti-Corruption and Civil Rights Commission will discuss the possibility of raising the limit on gifts to public servants. Applied only to farm and marine products, authorities are considering raising the current 50,000 won barrier to 100,000 won, or roughly $92. They could also consider raising the meal limit from 30,000 won to 50,000 won, or $46. The number of workers in Korea's bread and butter industries like automobile, shipbuilding, and electronics declined sharply last year. According to Statistics Korea, shipyards saw a 9% decline in their labor force, while the electronics industry shed about 4% of their work pool in 2016. Experts say major restructuring efforts seen in the shipbuilding industry and lackluster overall exports last year contributed to the decline. On the other hand, manufacturing firms producing plastic and medical equipment in particular performed better as they ended up hiring more people. The statistics agency says the total number of businesses and employees working in mining and manufacturing has been rising for the past 7 years. Damages from the magnitude 5.4 earthquake which struck the southeastern city of Pohang earlier this month is now being estimated at nearly $90 million. On top of that, the government is still trying to provide permanent shelter for the hundreds of residents who have been left homeless. Our Yoo Jun-hee tells us more.
According to the latest damage assessment of the Pohang earthquake, Nearly 30,000 cases of property damage have been reported by local residents, amounting to roughly $39 million. An additional $49 million worth of losses were incurred to public infrastructure, such as schools and port facilities. While damaged buildings can be repaired, finding adequate shelter to relocate the more than 1,000 residents who have been left homeless is the most urgent task being faced by the government. The redevelopment of aging apartment complexes that have been slated for demolition could provide the permanent shelter they desperately need.
We have asked the central government to ease regulations so we can quickly move forward with the plan in cooperation with local residents.
The government has set aside an additional $3.7 million worth of special grants, on top of an identical amount that was previously allocated last week for emergency disaster relief. Various fiscal and financial aid measures, such as tax waivers and deadline extensions, are being offered to help residents get back on their feet. For owners of damaged or destroyed boats, automobiles, and machinery, transfer tax exemptions will be provided on the purchase of new replacements. As of Sunday, the government says more than 93% of all the damage has been cleaned up. Despite this figure, the city, and especially its now homeless residents, are still facing a long uphill battle to fully recover from this unprecedented disaster. Eugenie, Business Daily.
Over in the U.S., after families enjoyed a turkey and pumpkin pies on Thanksgiving, shoppers poured out on Black Friday, one of America's biggest shopping events. But while Black Friday shoppers used to wait in long lines hours before stores opened, a new shopping trend has emerged this time around. Our Park Hee-jun tells us more.
This year's Black Friday sales in the United States climbed to an all-time high thanks to a massive boom in online sales. According to Adobe Analytics, which analyzes transactions at the 100 largest U.S. online retailers, customers spent a record high of $5 billion on Black Friday alone. That's an 18% rise on year from last year's $3.3 billion of sales. The huge increase is attributed to increased use of mobile devices. Reports say that 40% of Black Friday online purchases were made through mobile devices like smartphones and tablet PCs. Also, with major discount sales on Cyber Monday, which comes just after Black Friday, the overall holiday sales are expected to be even bigger. Adobe Analytics forecasts that shoppers will spend $6.6 billion online on Monday, 16% higher than last year's record. That will make it the biggest digital shopping day in U.S. history. In contrast, the number of shoppers visiting stores dropped. Massive crowds used to burst into stores and fight their way to major bargains on Black Friday, but although there were still long lines, those scenes have been less common this year. Retail research firm ShopperTrack reported that the number of offline shoppers fell 1.6% and is expected to continuously fall in the upcoming years, showing a somewhat shrinking significance of the annual shopping ritual. Park Hee-jun, Business Daily.
After a tepid start, ticket sales for the 2018 Pyeongchang Winter Games are starting to gain traction, with more than half of them being sold. The organizing committee says around 555,000 tickets for sporting events, as well as the opening and closing ceremonies, have been sold as of last Friday. Now, that's some 52% of the committee's target of 1.07 million, up from just 30% seen at the start of November. The committee attributed the rapid rise in sales to the Olympic torch relay that has been touring around the country since early this month. Tickets are available online at tickets.pyeongchang2018.com and offline as well as city halls, airports, and train stations. And for those of you outside of Korea, you can buy tickets through your National Olympic Committee and authorized ticket resellers. India, with a population of over 1.3 billion people, is offering a lot of new opportunities for Korean conglomerates. But while such big companies are able to navigate complicated, unfamiliar business landscapes, small and medium-sized companies struggle to do so. So the Seoul metropolitan government is helping to connect Korean SMEs and their cutting-edge technology with Indian investors. Our Kim Hyo-sun explains.
A growing number of Korea's small and medium-sized businesses are making inroads in the Indian market. One venture company already recognized for equipping college campuses with Internet of Things technology for controlling buildings got to make a presentation to Indian investors thanks to the Seoul metropolitan government.
India has a great interest in smart cities and is willing to invest on the state and central government levels. Fortunately, the city of Seoul also has great interest in this area.
After the presentations, the SMEs sat down with the investors, and 5 of them signed a memorandum of understanding with their new Indian partners.
India is one of the biggest country who's using the internet services, IoT services. So these companies are very good manufacturing, very good technology they have. So what India needs the technology.
And now, having opened its doors, the Seoul India Economic Exchange Center will also serve as a bridge for Korean SMEs entering the Indian market. Korean conglomerates have already invested $5.3 billion in India in the areas of automobiles and steel. The SMEs are just getting started, but great possibilities lie ahead of them. Kim Yo-sun, Business Daily.
Korean retailers are stepping up marketing efforts to attract more Chinese consumers, with Beijing's retaliatory measures over Seoul's THAAD deployment seemingly on the wane. But experts say it's still too early to be too optimistic about Sino-Korea relations. Our Lee Ju-young has more.
Korean retailers are beginning to step up their marketing efforts targeting Chinese consumers again, as improved Sino-Korea relations is ratcheting up sales figures. For one, major retailer Shinsegae department store sales in the first 10 days of November from its Chinese consumers surged nearly 24% from the same time last year, while the figure on Singles' Day in particular jumped close to 40% on year. The sentiment rang true for other department stores, with Lotte department store also recording roughly a 20% increase in average daily sales in November from their Chinese customers.
The number of group tours is less compared to before the THAAD row, but I think the number of individual tourists will increase more.
While the duty-free industry is also boosting marketing efforts to woo Chinese tourists as Beijing's unofficial economic sanctions are seemingly being lifted, experts say it may still take a long time before full-scale and definite improvements are seen.
Positive effects appear to be limited as China is focused on rebalancing its economic structure through new consumption policies.
What's more, with requisite systems not yet set in place regarding visas and flight issues, experts add that the after effects of China's THAAD retaliations are not expected to fade easily. Lee Ju-young, Business Daily.
And Chinese shoppers are snapping up luxury goods once again, accounting for a third of all global sales in the luxury market this year. That's according to Chinese online website China Plus. Citing Bain & Company's luxury market study, it says Chinese shoppers bought $1.4 trillion worth of high-end goods this year, some 32% of the overall global market. By 2025, it forecasts that Chinese shoppers will take up 44% of the global luxury market on the back of the country's growing middle class. The middle class, working women, and young consumers have been credited for driving the increase in sales. The eSports industry is on a rapid rise, with gamer salaries and revenues skyrocketing in recent years. According to a government report, the average salary of professional gamers were seen at $90,000, 52.5% higher compared to last year. Revenues were tallied at $76.5 million in 2016, up 15% from the previous year. Korea's share of global revenues was also estimated at 15% in 2016, while the surge in player salaries were due to popular players returning from overseas. Broken down by sector, broadcasting accounted for 45% of the entire industry, followed by professional gaming teams and streaming services. And that wraps it up for today. But we'll be back tomorrow with more of the day's top business stories, so don't forget to tune in then. Thanks for watching, and goodbye.